This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hello, everyone. This is Mathis Conner with Conner Management Group, and this is the Best Stocks to Buy podcast. Today is Thursday, February 1st, 2018, and this week we're going to be looking at the best dividend stock to buy right now. Here on our opening slide, it's called the setup and the approach. Now, the objective of this podcast is to present to you a high probability upside potential stock. The key tool we use is a proprietary tool that we developed that uses multiple valuation approaches, and we apply them across 6,000 stocks every week. So the view you're getting is not driven by some sensational headline and some popular publication focused on increasing readership, but simply on finding the best investment opportunity to present to you. An easy way of thinking about our approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, I truly viewed creating such a financial model as daunting, but I believe I was well prepared for the challenge. I have both computer programming experience and as an engineer and over $15 billion of transaction experience as a banker to review the research we find. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, our model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections they share with the public. Now, a point worth remembering, these views are based on today. An unforeseen economic report or regional conflict, a revised policy can change these expectations tomorrow. A benefit of using a professional money manager like Conner Management Group is having someone experienced and making educated assessments about the uncontrollable, as well as sharing our view of current circumstances. And now, so what did our model find for you this week? It turns out that the best dividend stock to buy right now is in the food processing industry. Now, on to our industry overview slide. The food processing industry is comprised of North American companies in packaged foods. They are meat processors and also are involved with agriculture. Just to level set, the 10 largest competitors by market capitalization are some pretty familiar names, I'm sure. Kraft Heinz, Mondelez International, General Mills, Archer Daniels Midland, Kellogg Company, Conagra Brands, J.M. Smucker, Campbell Soup, McCormick and Company, and Bunge Limited. These are all kind of names I'm sure you've seen within supermarkets. The key growth drivers in this industry right now are U.S. corporate tax reduction that's expected to contribute to their cash positions, continued growth in consumer confidence, and a new trend is that there's a growth of plant-based meat sales. Yes, plant-based meat sales. Okay, some of the industry challenges in the industry right now is competition remains intense with tight pricing, and additionally, there's been steady industry merger and acquisition over the last few years among large players. So now for the big reveal. The best growth stock to buy right now is a company called B&G Foods. B&G Foods. On to the quick facts slide. B&G Foods Incorporated manufactures, sells, and distributes a wide range of shelf-stable food and household products in the U.S., Canada, and Puerto Rico. Our products include hot cereals, fruit spreads, canned meats and beans, bagels, chips, spices, seasonings, hot sauces, wine vinegar, maple syrup, molasses, salad dressings, sauces, and other specialty products. Now, B&G Foods may not be a household name, but a couple of their brands, and they do have a lot, are pretty well known. Some of their popular brands you've probably seen in supermarkets are Cream of Wheat, Green Giant, Mrs. Dash, or Ortega, and they have a host of other small name brands. And their website is www.bgfoods.com. The company is headquartered in Parsippany, New Jersey. They were founded in 1996, and they have 2,548 employees. On to the metrics slide. The revenue over the last 12 months for B&G Foods was $1.4 billion. Their net income was $109 million for the last 12 months, and their cash from operations was $107 million. On to their operating margins. For 2017, the operating margins were at 21%, definitely respectful margins. And for 2018, they expected to expand slightly to 21.5%. On to the valuation metrics. The trailing PE ratio for B&G Foods now stands at 18.2, and the forward PE ratio is 15.5. The PEG ratio stands at 4.2. That's a bit rich. The price to sales ratio is at 1.4, and the price to book ratio is at 2.8, and the enterprise value to EBITDA ratio is at 12.4. The dividend yield for the company is a healthy 5.6%, which is one of the reasons why we think this is an attractive stock. And the average dividend payout ratio is 91%. On to the price chart. B&G Foods has pulled back a bit over the past year. The high of the past year was about $47.50, and its low over the past year was around $30.50. And the stock has pulled back quite a bit from third quarter 2017, primarily due to a number of acquisitions the company has made and had been making over the past 2 to 3 years. Additionally, the company issued some stock, so there was a bit of dilution there as well. But the future is looking bright to us, and we think that this is a good buying opportunity right now for a company that pays a very healthy dividend. The next slide, looking back and looking forward. Looking back, B&G Foods has grown significantly through acquisitions. The acquisitions and stock issuance has contributed to share price decline, some dilution, as we mentioned. And the company continues to pay a healthy dividend yield through a dividend increase they made just last year. Looking forward, operating margins are expected to improve as a result of the integration of their recent acquisitions, and the company has recently improved its liquidity and refinanced its debt through a recent capital markets debt issuance. The next slide, the why now, the bull rationale. Well, there are a number of reasons that we think that this is an attractive investment opportunity right now. This is what we see in the near future. Increasing sales per share, decreasing in capital expenditures per share, and they also have low valuation metrics. We see the companies having relatively low valuation metrics right now, as well in the near future. And additionally, over the next year, they expect it to reduce their debt. So, increasing sales per share, decreasing capital expenditures per share, low valuation metrics, and a reduction in debt. Onto the summary slide, we see that financial statement quality is good. The operating margin is relatively flat. The price pattern trend has been a bit volatile. We expect that to end as they integrate their acquisitions. The industry outlook, as we've mentioned, it's been competitive, and there've been quite a bit of M&A. There've been quite a bit of merger and acquisitions going on. Overall market outlook is positive. The recent closing price for B&G Foods was $33.35, and our 6-month price target for the company we see at $43, and that gives this company a 6-month upside potential of 29%. So it's for all these reasons that we believe that B&G Foods is the best dividend stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye. Hello everyone. This broadcast was made by Connor Management Group. We are a registered investment advisor and money manager for individuals, businesses, and family offices. We are not your typical financial advisor in that we invest our clients' funds directly into individual stock positions. We do not put our clients into other stock mutual funds. At Connor Management Group, we help you grow and protect your assets. We craft high growth investment portfolios for your children and other minors. We manage the rolled over assets from 401k accounts. We manage IRA and trust accounts. So how do we go about serving our clients? One big differentiator is that we developed some pretty comprehensive computer software that reviews, analyzes, and ranks over 6,000 stocks on a weekly basis. And from that, we create concentrated investment portfolios of well-researched and closely watched stocks. Furthermore, we operate under a managed account arrangement, and that means you open and fund a brokerage account in your name, and we simply manage your investments electronically. That gives you, our client, the greatest control and transparency possible. You can learn more about our service at www.connormg.com. Additionally, we've set up a group on the LinkedIn platform. The name of our group is simply called Stock Investing Tips, Better Returns, Bigger Pockets. Now, this is a private group, which means you have to click the Ask to Join link. We do this because we want to be able to control the quality of the member experience. So if you like what you heard and would like to receive more timely investment information and be able to post questions, just send me a message to Ask to Join our LinkedIn group. You can readily find my profile on LinkedIn. It's Mathis Connor. That's MATHISCONNER. And if you have any problems connecting, just send me an email at mathis@connormg.com. Well, that's all for now, and I'll talk to you in our next broadcast, or hopefully with you in our LinkedIn group. All right, everyone. Have a great week.